It is at this moment that projects like Bitcoin show their intrinsic value. And this opinion is so widespread that someone showed up in front of a Silicon Valley bank branch with a van that had "Be Your Own Bank" and the Bitcoin logo written on it. If we look at the performance of Bitcoin since the beginning of the year, it is undeniable that something has changed in the minds of investors, or maybe not. In this video, we will delve into what is happening with Bitcoin. What are the reasons for its recent growth, and it may not be what you expect. We will also explore under what conditions to include or maintain Bitcoin in our portfolio. I do not agree that people are starting to use Bitcoin for what it was created for, which is protection against the centralized banking system. Not only are they not using it now, but they have never used it in their history. Let's start with what is happening with interest rates, because if we do not understand this, and do not understand the expectations that investors have regarding the economy and Fed policies, we will not understand investors' expectations regarding the future of interest rates. In this chart, you can see the evolution of expected interest rates for the next few months up to January 2024. In the last 2 weeks, there has been a profound upheaval in investors' expectations for interest rates. In other words, the latest estimate of the evolution of interest rates would suggest that investors have already practically reached the maximum possible interest rate, and we see how the evolution of interest rates predicted by the markets at the end of the year has changed drastically. What is interesting to note is that there has been a major upheaval in expectations in the last 2 weeks. We have seen the highest reduction in the 2-year Treasury yield. Regarding the increase in interest rates, the extraordinary nature of this event is evident from the violence of this depreciation, as shown in this graph that displays the daily fluctuations of 20 basis points on the 2-year Treasury. Therefore, the 2-year American government bond is at its highest level ever. There is strong volatility in government bonds and significant uncertainty about what the Fed will do. Increases may be nearing an end, and that is what the markets are betting on. Bitcoin is ultimately a long-duration asset and an alternative investment class deeply tied to the evolution of interest rates, realizing the outlook on the future evolution of interest rates. This has brought a favorable wind for all those investment classes that instead went into a major crisis in 2022 when the fastest increase in interest rates in the last 40 years sent the entire growth stock sector, NASDAQ, and cryptocurrencies into a crisis. In the entire technology sector, capital flows into the NASDAQ have led to the best week compared to the performance of the S&P 500 since the global financial crisis of 2008. The entire technology sector is currently thriving, not just Bitcoin. The percentage of stocks within the NASDAQ above the 200-day moving average, which is an indicator of the bullish trend, has increased dramatically in recent weeks precisely because of this change in expectations about interest rates. The entire technology sector, which was in a bearish phase since the end of 2021, now seems to have regained momentum, outperforming the S&P 500 in terms of relative performance. This is why the crypto sector and even Bitcoin have returned to greed mode. So we have understood that a good part of this bullish push of Bitcoin is linked to a change in perspective on interest rates, which benefits Bitcoin as much as NASDAQ and growth sectors. Is Bitcoin really a hedge against centralized banking? Based on the data, if we compare the performance of Bitcoin with other investment classes, such as gold or the S&P 500, in my opinion, the answer is no. It is indisputable that since the beginning of the year, we have had a positive return, with gains of around 65% from the beginning of the year to the date of recording this video, compared to 4 to 5% for gold and 2 to 3% for the S&P 500. However, if we extend the time horizon to 2022, we notice that gold closed 2022 practically unchanged, the S&P 500 closed with a loss of about 20%, and Bitcoin closed with a loss of over 65%. 3 out of 4 quarters in 2021 were very positive, and more or less towards October-November, it became clear that interest rates would increase significantly, and then fear started to creep in across all investment classes. As a result, stocks began to correct, and Bitcoin lost a good portion of its gains from the beginning of the year. Nevertheless, it still closed with a 60% profit. What is interesting to note, however, is that when the S&P 500 grows, Bitcoin grows and vice versa, with the difference being that Bitcoin seems to be an S&P 500 on 4x leverage. That is, it always has a volatility 3 or 4 times positive or negative compared to the simple 500. If we extend the horizon to 10 years, clearly, Bitcoin's growth remains exponential compared to other investment classes because over 10 years, the S&P 500 has grown by 176%, while Bitcoin has grown by 200,000%. However, in my opinion, it does not make sense to go back so far in time because past returns are not a guarantee of future returns. Bitcoin is still in a phase of price discovery, meaning that the discovery of the price will last perhaps another 5 to 10 years, because as an investment class that does not produce cash flows, the process of defining the right price is much more complex than if we were to buy a bond or a stock, where we have metrics to understand whether the stock or bond is trading at a premium or a discount. But beyond the analysis of returns, which must be done with due diligence, we have forgotten that from 2010 to 2020, interest rates were practically at zero for a decade. The real question is whether Bitcoin is a truly safe haven asset like gold. The answer today is no. Perhaps it will be different in 10 years. At the end of 2018, in the last quarter, the Fed began to raise interest rates, and the stock markets did not take it very well since years of practically zero interest rates were coming. What happened? Gold grew by 682% in the last quarter of the year, while the S&P 500 fell by 14% and Bitcoin by 45%. So all things considered, the statement that Bitcoin is currently appreciated by investors for what it is, as a protection against the centralized banking system, in my opinion, is not a shareable comment. 1 year or a year and a half is not enough time. The fact that gold is globally accepted as a safe haven asset is the result of centuries and millennia of human evolution. Therefore, does gold remain the true safe haven asset? In 2022, central banks worldwide hoarded gold, purchasing and adding 1,136 tons of gold to their reserves, by far the largest annual purchase since 1950. Central banks love gold because it is expected that during turbulent times, they do not have to rely on an issuer or a government, which is the objective that Bitcoin is trying to pursue. In terms of price performance and role within our portfolio, Bitcoin is not behaving like a safe haven asset, but rather the opposite. It remains a highly speculative investment class. It is not an investment class that protects us from inflation because in 2022, with inflation exploding, it provided no protection to portfolios. It is an investment class that is heavily dependent on interest rates. Finally, since it is not used as a payment instrument like a currency, when markets go into risk-off mode, they want to reduce risk from their portfolios, investors usually divest from Bitcoin and leave the money as liquidity. However, one thing is certain, something is moving, and personally, a small portion of my portfolio can be invested in Bitcoin, but small means 1%. We know that sooner or later, regulation of the entire crypto sector will arrive, and this is a wildcard variable because we do not know exactly how it will be regulated.
While you've reached the end of the video, if you are interested in learning more about similar topics, here you will find other really interesting videos from the channel. Thanks for watching this video. Click on the like button if you enjoyed it, and do not forget to subscribe in case you didn't. See you on the next one.